basically income that is subjected to taxation. And that brings us to the fact that there's a difference between what we call accounting income and what we call a taxable income. If you have the accounting income, then basically we have to adjust the accounting income in order for us to determine what we call taxable income. So the first entry is disposal of interest in a contract area. That is what we call a taxable income. That is taxable operating income. Number two, we have what we call exploration expenditure, a figure of 380 million. That is allowable expense. That is what we call allowable expense. And when you say allowable expense, these are expenses that can be deducted to get what we call a taxable income. The next item is depreciation. In taxation, we do not have an expense called depreciation. And so depreciation is what we call non-allowable expense. It is not used, it is not deducted to get the taxable income. But instead of depreciation, we grant what we call investment allowance for investment allowance. Then we have what we call maintenance, management, and administrative expenses, a figure of 580 million. That is what we call allowable deduction. That is what we call allowable deduction. Then we have what we call oil and gas storage facility. When you talk about oil and gas storage facility, that is what we call a capital expenditure. So a capital expenditure is not allowable expense, but for a capital expenditure, we grant them what we call investment allowance. And the investment allowance under mining, we normally grant it at the rate of 50% in the first year, and we say 25% per annum from the second year on the remaining balance. The next item is what we call decommissioning cost. That is an allowable expense. Then the next we have what we call amortization of intangible assets. When you talk about amortization of intangible assets, this is a non-allowable expense. We do not less it to get what we call a taxable income. Then next we have what we call installment tax paid. Remember, in taxation, all forms of taxes, be it corporation tax, be it installment tax, be it custom duty, or even excess duty, all these forms of taxes are what we call non-allowable expense. So then we proceed to the hire of saloon car. There's a difference between hiring or leasing and what we call buying. When you buy an asset, then therefore you can claim what you call investment. Allowances, the loss of value of the fixed asset. But when you hire a motor vehicle, we only claim what we call lease value. And in this case, we hire. There's a hiring of saloon car, so that those should be the hiring values to the lease value, which in taxation should be allowable expense. Hire of tractor, a figure of 2,380,000. That is also an allowable expense. That is also an allowable expense. Then we have what we call custom duty on drilling machine. Custom duty on drilling machine. Two aspects of things on that entry. We say that custom duty is a form of tax, and all forms of taxes are non-allowable. But remember, when you talk about custom duty, these are costs that are added. These are basically costs that are added before my machine is put to use, and therefore they are entitled to what we call investment allowance before the machine is put to use. So those costs that are added before a machine is put to use, though a duty is a form of tax, but because it is an expense that is basically incurred before a machine is put to use, we grant it what we call investment allowance under mining, which is 50% in the first year, 25% per annum on a straight line or from the second year on the remaining balance. Then we have what we call natural gas, sale of natural gas. So when you talk about the sale of natural gas, that is a taxable income. A taxable income implying that this is basically income that is subjected to taxation. Then lastly, on the items that we're given, we have what we call general expense. General expense in this case is what we call allowable expense. So for the general expense, a figure of 78 million, we can deduct it to get a taxable income. So additional information number 1, we are being told that the crude oil sold locally. So when you say crude oil is basically sold locally, it is sold within the country. But you're being told that this crude oil that is sold within the country has a capacity of 59,000 barrels. As a capacity of 59,000 barrels, then you're being told that crude oil sold to a company in US, that is a figure of 1,920,000. Then you have crude oil sold to a company in the US, a figure of 3,381 barrels. Then you're given the selling price. We are given the selling price for each. So locally, as we get the working, we need to understand that those crude oil, the sales that we have on additional income, those are taxable income. So we can get the sale of crude oil. We just put it here as working 1, what we call sale of crude oil. What we call the sale of crude oil. So we start with locally. So locally, and remember we round them to thousands so that we do not have a huge figure. We round them to 1,000. So locally we have 59,000 barrel, and we are being told on additional information too that locally we sell a barrel at 9,600. We sell a barrel at a figure of 9,600. So we get the figure for that. So that should be 59,000 times 9,600. So that should be 566 million, 566 million, 400,000. But we are rounding to 1,000. So that should be 566, 400. So we are rounding it to 1,000. We note it there. So then we proceed to the sale of barrels to a company, sell to UK. Sell to UK, what we call sell to UK. So sell to UK, that was a figure of 1 million. We have a figure of 1 million to a figure of 1,920,000. So being told that each barrel cost 50 USD. Each barrel cost, not USD, but to the UK. Very keen. If you look at that additional information, number 2, you have to be very keen. The examiner has interchanged. But for the UK, it is 44 pounds. So if you pick the second following in order, you're definitely going to miss it. So for the UK, we have 44. If a student is not very keen, you're likely to miss on that. So you look at the third entry or the third dot, that should be 44. What is the conversion rate? Because remember, this is a country that is operating in Kenya. So we're being told that €1 is about 190. So we multiply by 190 to get the figure. We multiply by 190 to get the figure. So we have 1,920,000. 920,000 times 44 times 190. So that should be when you get it, that should be a figure of 160, 160, 12, 12 times 10 raised to power 0. Then you just had 2 zeros here. So that should be rounding off to thousands. Rounding off that to thousands. That should be about a figure of 16,501,200. That should be 16 million, a figure of 16,501,200. Remember, this is rounded to 1,000. That figure is definitely rounded to 1,000. Then we pick the sales, that is for the US. The sales for the US was US, sell to the US, sell to the US. We know that in the US, how many barrels were sold. The barrels that were sold to the US were 3 million. We have a figure of 3 million, 3 million, a figure of 3 million. We have a figure of 3 million, 381, 381. we have a figure of 3,381,000 barrel. And each barrel cost this much, 50 USD. It costs what we call 50 USD. And conversion now of the USD to Kenya shillings, we multiply by 20. Conversion of the USD to Kenya shillings. So we have a figure of 3,381,000, 3,381,000, 3,381,000 times 50 times 50. Then we have times 120 times 120. So times 120, that should give us, we have a figure of a figure 0, 0, we have 0, 86, 86. So that should be a figure of 20 million to 86,000. That is rounded to 1,000. So this is the sales for the US. Sales for the US. We proceed to the next. So then we have additional information number 4. So when you look at additional information number 1, additional